For Global Business Update, Michael Wilson joins us now from Cape Town, South Africa.
Good morning. I think that Rufai actually needs a hot toddy, and he's allowed one at this time of year. He probably knows what that is. If he doesn't, then I'll email him and let him know. But it's quite a pleasurable experience. It really takes care of those vocal cords. Let's take a look at Asia markets first of all. And China is dropping its quarantine for inbound tourists, and that's strength. And a lot, well, such as is open. Hong Kong on holiday, Australia, New Zealand are all closed for Christmas holiday. But the Shanghai Composite up about 0.5%, the Nikkei up about 0.5% as well. We noted, didn't we, yesterday that Beijing was sort of coming back to life again. A lot more traffic on the roads and a lot more footfall as far as shops are concerned. But, and this is a big but, investors are still doubtful about the pace of how quickly China can recover from its zero COVID lockdown. Let's turn our attention to Japan. Retail sales up there for the 9th month. It is slowing very, very slightly, and it's getting help from tourism. The reason why retail sales are so important in Japan is that basically private consumption is half the economy in Japan. But as I said, the pace of it is actually slowing. It had 1 million visitors so far in November, but price increases are hitting the economy there. So the retail sales up 2.6% as opposed to 3.7%, but they are still rising month on month. I think that's the crucial thing. As far as the United States is concerned, well, back to work today, basically on Wall Street for the final week of 2022. Stock futures are up. The market's been weighed down, as I keep telling you, by recession fears. But futures on the Dow up about 157 points. Will there be a Santa rally? A Santa rally is defined as a rally in the last few days of the old year and the first full trading days of the new year. And if it gets those, then you can look at a Santa rally. What it actually means as far as this volatile year approaching us, I have absolutely no idea. I just really mention it as part of the way in which they'll be going back to work on Wall Street today. But this has been the biggest monthly decline since September in all the stock markets, in all equities in the United States. Cyber attacks. Now, this is something which we occasionally talk about. And very, very thankfully, a lot of this is actually moving from the techies up to the boardroom. And Zurich is one insurance company which is saying that cyber attacks are basically uninsurable. Zurich and other insurance companies, Zurich's one of Europe's largest, that's why I mention it, but most of them are facing huge problems as far as the pandemic's concerned, and also climate change. Again, these are very, very difficult things to quantify, but it's felt to be about $100 billion in claims just from those alone. Many of these companies have been adapting their contracts with their clients to make sure that they are not wholly responsible for cyber attacks, and that the majority of the expense of cyber attacks actually falls on the clients themselves. And we're not just talking about private data stuff. We're talking about big things like pipelines, hospitals, government departments being shut down, a real weaponization of cyber security. As far as the ECB is concerned, now again, we've been looking at the way in which they've been increasing interest rates. The Dutch central bank governor, Klaas Knot, that's him pictured there, I think, and he's saying that we are halfway to peak rates, just past the halfway point. He thinks they're now 2%. If you needed reminding, they've come up from 2.5%, obviously in negative, but inflation at 10.6%. Get this, in the Netherlands, from which the Dutch central governor is speaking, the inflation rate is 17.1%. So it's no doubt that he's very concerned about inflation and therefore thinks that interest rates will rise. But of course, there's been a slowdown in the bloc, and he's saying that the ECB was too late to start raising rates. So basically, central banks also just having to deal, particularly in the eurozone area, with battling inflation but not wishing to crush the economies. The UK, again, fairly quiet because of the holidays, but senior officials have been using this to warn the government that the majority of businesses are completely unprepared should the Chinese invade Taiwan. Now, should that happen, there would be a tremendous problem with supply chains, particularly for semiconductor stocks and also for medical supplies too, which are manufactured in Taiwan. And these senior figures, they are senior civil servants rather than being politicians, but they are quite senior, and they've been looking at this for a long, long time. And they're saying that the UK is up against one of the greatest chess players in the world, which of course is China. It's staying with the UK, and if you want to look at the way equities are going, the retail sector is one of the biggest shorted sectors from private equity on the London Stock Exchange. 6 of the most shorted stocks. The top one is ASOS, which is that clothing company, as seen on screen, Majestic Wine, Boohoo, Kingfisher, and also Sainsbury's. All these stocks shorted by hedge funds who think that the rising cost of living and also the lack of spending ability will cause retail stocks to fall. Oil, I won't give you the figures simply because it's too volatile, really, and the day-to-day figures mean very little. But the big majors are worried about the Russian threat. There's conflicting messages from Russia about whether it will actually cut or stay with its production. It could cut by 7%. It's been offering these sort of warnings to all the countries within the EU that have participated in the price cap, as the EU has as a whole, but also the UK and the United States. And they're looking at a 50% fall in the volume of Russia oil export volumes. So I was talking about this with the doctor yesterday, and really, he was saying that Russia has threatened to cut gas supplies. Well, yes, it can do, and it can also threaten to cut oil supplies, but it's really spiting itself by doing that because it's getting less income. That's the global view.
All right. I'd like to ask Michael, do you think with this price caps at any time, this will break the back of Russia? Because it has become evident that the ruble is really suffering, and the Russians were just trying to prop up the ruble. So that value they put out for the ruble might not be empirical, it might be Russian manipulation. And the war is beginning to get to the citizens in Russia. There's been massive recruitment campaign drive videos of people earning money on the war front. In fact, there was one that says, if you want to buy your girlfriend a good car, impress her, go to fight the war. So does that mean that with this economic stoppage and this cap as regards Russian oil, if revenue drops, we can start to see the beginning of the end of the war in the new year? Is there a possibility of that?
I think that as far as you can tell from outside, the oil revenue that Russia has experienced at the moment must be shrinking, and the gas revenue must be shrinking too. And what the general populace thinks about the war against Ukraine, I think the Russians actually described this as a war for the first time a couple of days ago. But what the general populace thinks about this, we have no idea. We have no idea what the thinking is in the Kremlin. We don't know whether Putin's staying or going, and if he were to go, who would replace him? Would it be somebody from a similar background? Again, we just simply don't know, and I feel that events will probably speak louder than words, if I can put it like that. I simply do not know. Everything that you've said, Rafai, adds up to what people are thinking about Russia right now, including the propping up of the ruble, which must be costing them billions in foreign reserves. It just must be. But they're propping it up because they see it as part of their sovereignty. What is going on there? I have absolutely no idea. All I do know is from relatively third-party sources is that Ukraine has defied what everybody thought would happen. It's defeating Russia in terms of artificial intelligence. It's defeating it in terms of digital intelligence. And Russia is still concentrating on this kind of blitzkrieg attitude towards artillery and the war and so on, which is one way to go about it. But the much smarter way, unfortunately, for Russia, is to go about it in the way that Ukraine is doing, about taking advantage of digital technology. So from that point of view, I think they're winning. But everything you've said points towards a weakening economy, but don't expect to hear anything from Russia about it just yet.
All right, thanks, Michael. Just going to your statement or your report around the chief executive of Zurich Insurance saying that cyber attacks will become uninsurable. His view is that governments should adopt a private-public scheme to respond to this, which is, cyber attacks, which is quite unquantifiable. I'd like your take on that, and also what the future would be across the globe.
Well, the problem with cybersecurity is that its importance is gradually creeping up to the boardroom from the technical department of various companies, and they're beginning to see that if you can put a halt to supply chains, if you can put a halt to oil supply pipelines, if you can put a halt to government departments, then this is beyond the realms of what we normally talk about, which is the way in which cybersecurity affects personal data. This is real concern. And what Zurich is saying is that cybersecurity is very much, I think what we're trying to say is that cybersecurity is still the responsibility of the individual companies, and they just simply cannot afford to insure it. And what insurance observers are noting, which is what I touched on, is that other insurance companies as well are trying to make sure that any fallout from cybersecurity claims actually rests with the companies themselves rather than the insurance companies, because the insurance companies simply don't know what the threat is. And Lloyd's of London have said almost exactly the same kind of thing. When something is uninsurable, it doesn't mean that it can't be insured. It means that they're having great deal of difficulty in calculating what the insurance ought to be, because at a certain kind of level, companies just won't pay it. They'll either risk it or take the hit themselves. Okay,
on Russian oil price cap, the clearest response that we have had from Russia is that Russia is saying that by 2023, it's likely to cut its oil production by 5 to 7%. Which will be between 500,000 and 700,000 barrels per day. And then, of course, it will not sell to those countries that are supporting the price cap. But I wanted to talk about China. Asia's stocks went up. Oil has gained, both the Brent crude and the WTI. And all of this because China yesterday announced that it will no longer be quarantining people at the airports, marking more or less the end of the zero COVID policy. Almost 3 years later, China is coming to the same spot like the rest of the world. But what is interesting here, in terms of the response of the markets, as reported, is that cemeteries, the stocks of cemetery operators and funeral homes has gone up. Feng Shunyuan, for example, the group has recorded heavy sales. So what does that tell us? They may relax a zero COVID policy, but it looks like the rate of infection is soaring, and maybe more deaths will be recorded. And that will probably have implications for economic growth that they've been talking about. What do you think?
What I think is that I'm not exactly sure that China is joining the rest of the world. And I, like the rest of the investor opinion that I'm getting this morning, is that people just simply don't know when China will start to function properly again. Yes, they have reduced quarantine, they have scrapped quarantine rules for incoming tourists, but still there is this figure of 250 million people who are infected with COVID or whatever it is. Certainly hospitals, apparently, according to reports, are full as well. And I mean, you can say what you like about it. I still am very, very skeptical, shall I put it like this, about China rapidly joining on with what's happening in the rest in the rest of the world. And even when it says it does, I don't necessarily believe it, because there's nothing to triangulate the facts coming out of China. All it comes from, it tends to come from government spokespeople, which I wouldn't trust. I mean, if you want to look at what's going on, I think it may be that far more interesting is the fact that Russia is saying this, as you say, will cut its oil production by 7%. Now, what does that say to you? I mean, does that say that they're cutting oil production because they don't want the rest of the world to have their oil? Or does that mean they're cutting oil production because they want the price to go up? I suspect it's probably the latter. So until we actually hear something fairly firm about that, I feel that's the way that we have to think about it right now. We have to look out for weakening signs for what's happening in Russia, and I think this is one of them. I think if they're cutting production by 7%, it's not because they don't want to produce oil, because they've got to store it somewhere and they've got to sell it somewhere. They're not getting the price that they want, clearly, from India and China. So I would suggest that cutting it by 7% is their attempt to push the oil price up. But I could be wrong. Who knows? I'm only guessing from outside, like we all are.
Well, thank you very much, Michael. Now, for business updates across the African continent, Rotus Sodiri joins us now. Good morning, Rotus.
Good morning, Doctor. Good morning, Ayo. Good morning, Rufai.
Good morning, Rotus.
Yeah, look, kicking off with police remuneration, the terrible events that took place over Christmas, definitely that officer needs to be prosecuted to the fullest extent of the law. But, you know, with the candidates all talking about the fact that the top candidates, all wanting to, I believe, support state police, we have to talk about how these people are paid. It is imperative that it is increased. I mean, studies have shown that if you are not paid properly, you are look at people who, one, don't make enough money that resort to other activities. Again, not justifying anything that took place. Police officer needs to be prosecuted fullest extent of the law, but we absolutely must pay these officers better, and they also have to be better trained. You will simply not be setting up checkpoints and extorting people if you are properly compensated and if you are properly paid. So it is really unfortunate, but now you've got the governor of Lagos State coming out and saying something. You've got Peter Obi putting out a tweet on this matter. Now this is at the forefront because of this, tragic occurrence. This pregnant woman that was bringing a child into the world in 2023, but this now really has to put this on the forefront for with respect to how they are paid. Now, as far as state police are concerned, this will now bring into focus the budgets of the respective states. A Lagos can afford this, possibly a River State, a Delta State, but then when you go further down the line, for other states that are struggling with their budgets with debt, that is the thing. So how these candidates work their way around paying police if they do support state police, that's something that really has to be discussed. To the Naira, we've seen the Naira appreciates over the festive period from about the 23rd to the 27th. We are around I think 730 to 740 on the parallel market to the dollar. Demand has waned a little bit, but can this be maintained? That is the question. If we look at the pressures that the currency is going to be facing going into the new year, you've got, school tuition, demand for that. You've got medical tourism, normal demand for imported goods. You've got electioneering that is going to be taking place with respect to the elections, which are very, very close now, I think under 60 days, right? And then to a smaller extent, you've got the folks who came for festive period that will probably be heading back and want to exchange the currency so they can take their FX back home to some degree. But it is going to face some pressure. Then there is also, as we go into the new year, the dollar and its impact on deregulation. Just to remind folks that the NNPC being the sole importer of refined fuel, the NNPC is able to do this at I think about 456 or 457, which is the official rate where we closed on Friday from FMDQ, right, or the INE window. So If you, just to remind folks, if you deregulate, I think the candidate for the All Progressive Congress said that he would yank it off and doesn't care about protests. But again, if marketers now have to source for FX to bring in refined petrol, they don't have that exchange rate shield where they can bring it in at the official rate. They have to bring it in at your 700s and so on and so forth, which of course, if that's your inputs coming in for your costs, you now have to sell above that, which means that if you take away fuel subsidies and you're deregulating and allowing everybody to import aside from the NNPC, the price is going to go up. So again, this still again is another major touch point for the candidates that are talking about removing subsidies, whether it is gradually or it is yanking off the Band-Aid immediately. In fact, by the way, the fuel queues that we're seeing now are at stations that are selling at 169, 170. I personally bought at 225 at somewhere else, and there wasn't a line, right? So there's also the psychology of whether or not Nigerians are ready to pay for higher fuel if they know that it's going to be available. So that is where most of these queues now are being concentrated. Those that are still selling at that official pump price, but where you're selling at a 225, a 250, a 280, a 300, there's no lines. But be that as may, the main thing here is, if this is one of the main issues for 2023, if you yank off these fuel subsidies and you deregulate, at what exchange rate will the marketers be able to bring the price in? That's another thing. The ECHO, you haven't talked about this still on currencies. I don't know if this is going to come up in 2023. The African Union, as we know, at least, well, for the ECOWAS nations, whether or not that unified currency is going to happen. Now, of course, if that does happen, the central banks in that region will lose their independence. If you think of how the ECB works and so on and so forth. So, I'm curious to see whether or not this pops up again. Now, of course, if you have a unified one currency, it facilitates trade, facilitates tourism. But of course, Nigeria is now subject to the conditions facing a Ghana or another nation. So I'm interested to see if this will pop up again. Yeah, of course, certainly, do weigh in. And speaking of Ghana, construction workers there are, unfortunately, they're being owed money. And that, which is no surprise with everything that Ghana is going through. However, I think their Minister of, Works, if you take a look at a quote from him, he was on television just yesterday or the day before, saying that they will be paid. Mr. Kwasi Amoako Atta, Minister of Roads and Highways, saying that the constructors on this country are doing a job despite all the difficulties, and they want to assure them that governments will continue to work in their interest. And he says that before the end of this year, partial payments will be made. So that's what's happening across the continent.
So a couple of things. In economics, there's something called the short run and the long run.
Are you referring to fuel now,
yeah,
or the ECHO?
Fuel.
Okay, fuel.
Fuel
okay,
first.
Yeah, okay.
In the short run, what you said will happen. If you deregulate fully, subsidies removed, you're buying, what is it called, Forex at 730, 740. In the short run, people will bring in. But also don't forget, it's going to be a buyer's market. It will now be a market where there are a lot of competitors trying to get attraction. So when the pricing war starts, it's who can survive. So if I can get mine in, because I want to maximize cost and sell out my cost, I'll be able to say, okay, let me benchmark it at a certain rate. It could be a 1 or 2 Naira difference.
Okay.
All right? And if that continues, in the long run, then you start to see price reduction. But in the short run, what you're saying will happen.
Yeah.
But in the long run, it should fizzle out. And it's also expected, and in the long run, the Naira should be more competitive, because once you start to now plow the money you are using for subsidies into social activities and everything, and will probably get leadership right, it will create a lot of buffers in the middle of the line. So in the short run, yes, but in the long run, there should be a level of balance in our price aggregation. All right, I don't want to make direct comparisons with the telecom sector because infrastructural layout are different.
Yeah.
But when you look at it, something like that played out. Initially, to buy a SIM card was over 15,000, 20,000 Naira. Or even 40,000 Naira at a point. You know why? Because you were paying for the infrastructure and everything and all of that. But once the differential and the balancing came in, then people could do a lot more. So in the short run, it's going to happen. But in the long run, things should get better. Secondly, as regards the ECO, it's going to be problematic because it's already political. France wanted to spite Nigeria. President Macron went to Abidjan about a year ago or so, and he said, oh, we're going to be in support of the ECO. What they wanted to do was to be able to manipulate the ECO, because when you aggregate it, most countries of the West African sub-region are French-speaking.
Right.
Ils parlent le français.
Right.
So when they have that, they wanted the backbone of the ECO to still be up there in France because of the colonial outlook. But Nigeria read the signs and kicked against it. So massively, yes, it will bring about trade, but there's also a colonial warfare that says we'll be greatly disadvantaged. And the question is, who's going to take up the independence of the bank? But I think a neat little idea that has been done is the scheme for currency exchange that has been done with the AFCTA.
Okay.
You know, I think there's sort of like an exchange for currency that, knock on wood, you can
trade.
make direct exchange
Payments,
of different currencies and payments. I think that portal being built up is a great way to start first, rather than going through all the rigmarole. And you remember that when the euro currency started, they set up something called an ERM, a rate mechanism where they had to benchmark and pair currencies at a certain rate against one another.
Yeah.
You remember when England pulled out of that in the early 90s, that caused Black Wednesday, and that caused recession and economic ripples and all of that. So you don't want to go through all of that. It's still a conversation on the table, but we need to fight the colonial warfare of France, and I hope France doesn't win.
Well, just real quick, for the Francophone nations, the franc is being backed by the euro. So that's another thing. They're getting that support from there. So there's that whole dynamic as well. Yeah.
All right, yes, let me just very quickly touch on Ghana and the Minister of Highways, Roads and Highways, talking about paying contractors. I'm struggling to see how that's going to be possible.
Yeah, exactly.
I mean, Ghana is facing one of its lowest economy, the highest inflation rate in decades, close to 40%.
50 actually.
50% now.
50.
The president has admitted that they're struggling to pay, to make payments to pay their debts. So whilst this looks really nice, and unfortunately this is what politicians do, make grand promises, given a deadline. The end of the year is just how many days?
A week.
It's less than a week. We're going to, by Sunday, we've finished the year, and they're saying you'll pay. It would be great to see how they're hoping to pay that, despite the economic crisis in Ghana.
Well, first with the ECO. The plan to have a common monetary union among the 15 West African states has been on the table since 1964. And they have shifted the dates of the launch more than 4 or 5 times. The latest information is that, look, it was delayed because of COVID, because the last launch date was 2020. And now the launch date again has been moved to 2027. This is not just about having a common currency to facilitate trade. Part of the problem is political, strictly. And the inequities, the differences among the various countries within Africa. And also the crisis of instability. When you want to launch the ECO or you want to strengthen the monetary union, there will be an issue in Mali. Or there will be a coup in Guinea-Bissau. So this is the reality that we'll find in West Africa. And the fact, of course, that these countries, their central banks are not of the same strength.
Right.
So don't be too enthusiastic that the ECO will be launched very soon and there will be a monetary union. Because I've had people raising the question, why is Nigeria redesigning the certain denominations when the ECO will come next year? Right. There is no certainty that ECO will show up next year. Just as there are disagreements over having even a common customs union.
Right.
So because of the differences that we have. So we talk about disunity inside Nigeria. There is disunity too within the sub-region. That's one. You started by talking about the police.
Yes.
And making a case for better pay for policemen. Well, I hope we're not making the mistake of indicating that policemen are trigger happy and they indulge in extrajudicial killing because their pay is poor and they are not happy.
Gotcha.
This was one of the major issues during the October 2020 SARS. The NSAS protesters, or demonstrators, if you like, one of their demands was that, look, better welfare for policemen. Pushing the Buhari administration in around October 2021 to promise to increase pay by 20%, give tax waivers for junior police officers, and give them welfare package. The only problem, of course, is that Yes, council approved money. I think about 12 point something billion that was approved for this, or was it 1.2 billion or whatever. But as at March 2022, you recall that policemen were threatening to go on strike.
Right.
Because the promise that had been made to them
was not kept.
Was not kept.
Yeah.
As of June, some papers were still saying the money had not been paid. And the Inspector General of Police was reassuring the policemen. Not being a policeman, I don't know whether the package has been paid. So this has been an old argument. Welfare. However, it's no justification
For what happened.
for reckless conduct. And what we're dealing with in this case of the murder of Mrs. Rahim is sheer criminality. And the law does not allow anybody to use the uniform of the Federal Republic of Nigeria, whether you're a policeman or you're a civil defense officer, to go about assaulting and killing and brutalizing the same people that you're supposed to serve and protect. I think we must have clarity on that.
Agreed.
As for Ghana, yes, the Minister of Roads and Railways says contractors will be paid their money. If you go back to the 2023 budget presentation by the President, he said, look, going forward, Ghana will have priorities. And you know the Ghanaian economy is overburdened by debt, both local debt and foreign debt. And which was why recently the Minister of Finance said, look, certain categories of debts, maybe of a bilateral category and short-term loans, they will suspend payment in that regard and focus on some other ones. So this position by the Minister of Roads and Railways fits into that plan. But for 2023, what they have is a budget of strict austerity, according to President Nana Akufo-Addo, while they are still working on that $3 billion that they are expecting the IMF bailout that they are
to provide.
that they are seeking.
Well, thank you very much.
Thank you.